If you live in a city, chances are you've definitely used this service before. Need a ride but don't have a car? Call an Uber. You may know it as a leader in the rideshare industry, a food delivery app, or both. Since apps like Uber have made it into the mainstream market, it has transformed the transportation industry. Before, if people didn't have their own vehicle, they had to rely on public transport at taxis, which are usually congregated in big cities, so those in small cities had it a little more difficult. Now, with Uber, you can click a button from almost anywhere and have a car come retrieve you. Hi, I'm Nufar, and welcome to part 7 of SSSMI, where I'm going to cover casually investing in Uber, which is the 6th company in my list of 25 companies you can casually invest in. So Uber, what is it? Well, it's a bit like a taxi, but with a predetermined rate and is usually hailed as cheaper. Instead of having to find a taxi, Uber lets the driver come find you, wherever you are, to bring you to your destination. To use Uber, you just need the app and some cash, and you can get yourself a ride. However, not only are they a transportation company, but they also transport food. Similar to DoorDash, you can order food from restaurants through the Uber Eats app, and a courier will deliver your food to you. Now here's the part that might be troubling. Of all the companies we've covered so far, Uber is the most recent one to have gone public, as in just 4 years ago in 2019, whereas companies like Costco or FedEx have been around since the 70s. Anyways, the company seems great up until you see this. $500 invested 4 years ago would be worth $461 now, which doesn't seem very promising. Its current stock price is $10 less than it was 4 years ago, which might be a turnoff to some. Sure, it's a household name, but we've yet to see if it's steady and reliable as a long-term investment. But though its past had some stunts, we can look towards Uber's outlook with a positive lens. Each year, the company shows steady growth and continues to expand their stance in the food delivery market. Ride-sharing is going to stick around for the future, and the company plans to convert to electric vehicles. This year-by-year growth, combined with these ambitious goals, could show that the company might have a profitable future. And a profitable company means a profitable stock. So what do you think? Unlike the stocks we've covered so far, Uber isn't as straightforward. It doesn't have a remarkable or lengthy past as it went public less than 5 years ago, so it's harder to predict where the company will be in the next 5-10 years and whether it's suitable as a long-term investment. Because of this, we can only make assumptions based on what we see year by year and the company's future plans. You can also use your personal experience to determine whether Uber can make a good long-term investment. You might see Uber cars on the road or use it yourself. So, is it good enough for 25 years and 25 companies? Or is Uber a miss? Thanks for watching and stay tuned for my next video. This is Nufar, signing out.